Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we'll take a look again at the euro currency. Well, European Central Bank decision has made the trading week recently, so you can see this really big rally that has happened on Thursday. Speaking of the Mario Draghi, so the analysis opinion on what Draghi has said is very different. And I saw in the comments even opposite arguments, even opposite views. So one analysis tell that the measures that ECB has announced are too small and insufficient to support the European economy. So there's not sufficiently dovish comments was made, and this has pushed the euro to the upside and collapsed the European stock market. That's the first opinion. Another opinion is that vice versa, that the dovish comments and measures were exceptional, and Mario Draghi has increased the time of the quantitative easing program to the 2017. This moment gives the traders and investors who are using the euro in the carry trade some confidence for the longer period of time, and they has increased the positions in the European assets. For that purpose, they need the more euro to invest in European assets, the stocks, and that's why this has increased the demand on the euro currency and has led for the increase in value. Despite what the real reason stands beyond this rally that we see right now, we will understand it very soon. We think that fundamental picture on the European Union and the European economy hasn't changed significantly, despite on the comments that the European Central Bank has made. Because the situation is really difficult with inflation, with production, social policy, the social situation in the European Union is very unstable, and these comments around the Brexit are always fluctuating inside of the European Union, closing the borders and so on. So this makes impact on the Europe, and fundamentally, I think that mostly this reaction will be short term. Still, from the technical point of view, depend on how market will behave on the current rally and what it will do with this rally in the nearest future. Different action could follow. So from the strategical point of view, if you will read our weekly research on the monthly time frame chart, if market will hold in the current situation, will continue to move up, and if this rally is the foundation, the starting point for the deep retracement on the monthly chart, market could creep as far as to 120, 121 area. And this will not break the total bearish scenario, total bearish long-term trend on the monthly chart. This will be just a meaningful retracement on the monthly chart. And that's all. But from the daily point of view, this really very significant actions, 120, 121, it's very significant distance. In the opposite direction, if market will erase this rally on the common week within 2 weeks and break current lows in 104.70, this will mean the downward continuation, and the next target will be parity. That's why it's really important what will happen around with this rally. Since we do not know how market will react, our task is to, if we in general would like to take some position, we should take it with the minimum risk and with a high probability to move our stop to the break-even to protect our position, where we could take the part in the trading, but at the same time don't stand under possible impact of the further action that will follow to this rally. So currently on the daily chart, as you can see, we have the setup for the Napoli directional trade. On the Friday, we said that this could be the bread and butter since market has hit major fib levels after the thrust down. This thrust is not perfect, of course, it's a bit choppy. So you can see this is multiple retracement, especially very close to the end of this thrust. But still, this could be treated probably as the bread and butter setup. If we do not want to treat it as the bread and butter anyway, we could treat it as the Napoli bearish stretch pattern, because as you can see, market has hit daily overbought right at the major fib level. That also the stretch pattern. The attractiveness of both of these patterns as the bread and butter, the stretch, stands in the high probability of the technical bounce out of this area. If even market will continue to move higher, these patterns works so that they trigger the technical combination of these indicators, forces market to show technical respect of this area. A technical bounce out from this resistance, because resistance is really strong, and particularly this technical bounce will let us to protect our position. And when we will be protected, we do not care what will really happen. If market will reverse to the upside, probably we will not get any profit, but we will get the clearer signs that further upward direction will continue, and we will know in what direction to trade. And in fact, we get the information free of charge. If it will be right and market will drop lower, taking out of these lows, that will be much better, because we already will be in market to the downside. That's why this exceptional value, exceptional attractiveness of these Napoli directional patterns. On the 4-hour time frame chart, guys, so that will be the major idea on the daily chart. To take the position based on these patterns, we need to get some reversal minor pattern on the intraday charts. So first pattern we already have discussed on the hourly chart. If you remember, on Friday we have discussed the possible double repo sell, and it has been formed and even it has started to work. But still market could show some minor leg up here based on this momentum. That's why on the 4-hour time frame chart on Monday we should keep an eye on this situation. So you can see market stands very close to the MACD predictor. If bullish grabber will be formed here, it means that market, for example, could form here some kind of the butterfly or something of that sort. So for example, market could creep a bit higher, which is 127 extension of this, for example, to the 1 or 10 area, somewhere in this area. So market could form here the butterfly, because the appearing of the grabber will mean that market will take it out of this top. And this is the pattern that you should watch for on Monday. If no grabber will be formed, market will drop lower, well, in this case will be really free, possible, will be relatively safe to take possibility to take the position on the downside of the market. On the hourly chart, guys, here is a double repo that we have discussed. As you can see, it hasn't failed yet, but price behavior is not really good for double repo. Double repo assumes the fast reversal. This is the capitulation of the bulls. But here we do not see anything of that sort. This probably more reminds some just pause in upward action. So if you have taken the position on the double repo, it will be better if you will protect it by the stop order, break-even stop order, because right now market stands slightly below than we have entered on Friday. So appearing of the grabber here is also possible if market, because you can see that 108 area is not bad support. This is a 3-8 support in the weekly pivot point. So market could test it and turn to the upside, and that will increase chance of the appearing of the grabber here as a possible another leg up. That's why you should keep an eye on the 4-hour time frame chart. The minimum target of the bread and butter trade stands right here. It's 106.80 area. 618 support from this low to this high. It's probably something of that sort will be also for a stretch, bearish stretch pattern. That's why if you have the short position based on the double repo, trying to protect with the break-even stop, especially if market will turn to testing of the weekly pivot point. If you do not have the position, watch first for possible grabber. If grabber will not be formed, the market just will shift trend to the bearish. You will be able trying to take the short position based on some minor retracement on this leg down that will start here. So that's short-term perspective on the daily chart on the euro currency. And after that, we will be watching for what market will do with this rally that has been formed here. Whether it will re-raise it, that will be one situation, or it will continue move high to the upside. That will be quite another tune.